TCS, which is of course one of the first to announce their quarterly earnings, and the Q4 results have shown substantial growth, one would argue. Revenue on a year-to-year basis is up almost 10%, 9.6% at over 70,000 crore rupees. Net profit also up in double digits on a year-on-year basis to about 13,700 crore rupees. That's up 12%, and the company has announced a dividend of about 31 rupees per share. But this morning, stocks not reacting too positively to news coming in from TCS earnings, and in fact the entire IT sector seems to be down, despite the knock-on effect from US would have suggested that IT stocks should trade in the positive territory. Any fears that investors are seeing around TCS, Amit, despite the fact that there is a 31 rupee per share dividend announced on the basis of a 12% year-on-year growth seen in profits?
No, I think on a standalone basis, TCS results was as per the expectations. The Q4 revenue grew around 1.25% quarter on quarter. The international business was again, 1.5% up. EBITDA margins expanded. There was, they have reinvested some of the tailwinds back into increasing capabilities and growth engines in the AI. The deal wins were strong. In fact, there were 3 mega deals in the last quarter, which takes the total deal amount to about 40 billion in FY26 total. So I don't think the result was that an issue, but what we are seeing the commentary coming from the US outside, outside this market, is that there are furthermore newer versions of Anthropic coming along, and this time it's going to hit a lot of accountants and tax entries which are happening.
Right.
There is a company called Intuit in the US,
Yeah.
which was down about 10% yesterday because it's tax filing season in the US, and a lot of people are using AI now to file taxes. So I think it's a sort of a cycle where every uptake or every version which comes in Anthropic, Cloud, etc., that's going to impact negatively, and it will take 2-3 quarters to sort of assimilate how IT companies like TCS are actually benefiting from this Gen AI cycle.
Benefiting, or some would argue losing, but of course sticking to the theme of AI, I think all those fears around job losses, and remember TCS was among the biggest players when it came to axing employment roles across the company last year. We've seen Q4 add numbers to headcount. In fact, we've seen as much as almost 2,400 odd headcount additions to TCS in Q4 as compared to Q3. And the total headcount now stands at about 584,500 odd people. But the attrition rate, especially in top management, seems to be higher in Q4 than what we saw in Q3. So overall, this entire AI disruption story when it comes to job roles, we haven't really seen that after last year impact the IT sector as much, at least in the first 3 months of this year, Amit.
No, actually, the headcount for TCS actually rose by around 2,300 in Q4,
Exactly.
including some 750 plus with the deep advisory and consulting expertise. So I think it's just a role redefinition, I would say. In certain cases where the employees have been able to adapt to AI faster, they have been reassigned into different projects, or they are sort of elevated from their current roles. And what we are seeing is that there is a growth recovery expected in FY27 with these strong deal wins. So I don't think we should really look at the overall attrition number. That number may have come down in the last 1 year, but it's sort of adjustment. If the Gen AI cycle picks up, they do more deals, the vertical sees more growth revival, then the number of hiring will also go up.
All right, Amit. And what is your overall view? I understand that you're saying the next 3 quarters or so are going to be critical to understand where the IT sector is headed with all the disruptions that we are seeing with AI and beyond. But overall, how do you see a day like today when there is a massive correction in these quality stocks names, one would argue, HCL, Tech, Infosys and TCS? A good day for investors to sort of, cherry pick some of these names?
I think anyone who is getting into IT should at least look at 3 years perspective. I don't think anything major is expected in the next 1 or 2 quarters. The valuations have corrected definitely, so they are quite attractive from a from a 2-3 year perspective. But at that point of time, there is a threat of Gen AI, and we really don't know how the terminal values of these companies would end up, going forward. So if anybody wants to, invest, have at least a 3 year perspective, because they are still, good companies to own, good dividend yield. You might get open market buyback if the SEBI consultation paper goes through. So there could be some upside, but keep the expectations low and have a time horizon of at least 3 years.
Right, so a time horizon of 3 years, because nothing really is going to move the needle in the next 1 quarter or so. With that, let's leave it at that for now. Thank you so much, Amit Kumar Gupta. As always, pleasure having you here with us on News9.